Yellarigu Namaskara. Welcome to the online memorial lecture series being conducted by the Karnataka State Bar Council and the Karnataka State Bar Council Law Academy. The purpose of the memorial lectures being conducted by KSBC Law Academy is to remember the stalwarts who made a mark in the advocate's profession and continue to be the beacon of light for the generation to come in posterity. We have conducted many seminar memorial lectures in the past in the memory of Sri R.N. Bhaira Reddy, Sri Bhujangarao, Sri N. Jairam, and many others. Today's seminar is dedicated to Sri G. Chandrakumar, a senior advocate who was a stalwart and undoubtedly a beacon of light for the younger generation. Mr. Chandrakumar, senior advocate, was born on 10th October 1938 in a Sindhi family of watch dealers in Shikarpur, the then undivided India, now Pakistan. Upon partition, he along with the parents migrated to India in 1947. He was initially residing in Jodhpur and then moved to Bangalore when he was a child. He did his schooling at Mysore Secondary School, Bangalore, a government school. Thereafter, he secured admission on merit at Joseph Junior College, Bangalore, and pursued a degree in Bachelor of Arts and graduated in the year 1958. Thereafter, he joined the Government Law College, Bangalore, now the University Law College, and obtained degree in law in the year 1961 from the University of Mysore. He practiced as a pleader from July 1961 to March 1962, and thereafter enrolled as an advocate on 10th of March 1962 and joined the chambers of late senior advocate Sri S.G. Javali, under whom he learned the skills of advocacy and legal learning in all branches of civil law. Within few years of his internship with the senior, he soon established his own independent practice and set up an office at Avini Road in the year 1966. In the year 1968, he was appointed as prosecution counsel for the Income Tax Department for the states of Karnataka and Goa and continued to hold the said position until 1990. During his tenure as prosecution counsel, he tried several high-profile cases which, considering his strengths, were settled by the accused by compounding the offences as per law. Simultaneously, he extensively practiced before the subordinate courts, tribunals, and High Court on variety of subjects, including taxation and constitutional law. He was amongst the first few questioned the constitutional validity of the Defense of India rules and filed several habeas corpus petitions and succeeded in securing the release of several citizens illegally detained under the draconian provisions of the then Coffee Posa Act. He was amongst the first few in the state of Karnataka to largely practice on the Central Excise and Customs cases, both at the Customs, Excise and Gold Control Appellate Tribunal, now known as the Customs, Excise and Service Tax Appellate Tribunal, as well as the writ side on issues arising under these laws. He has a large number of cases, both from the High Court as well as the Tribunal, which are reported in various tax journals on these subjects, dealing with the development of law on this subject. In the year 1990, he was appointed as a special counsel for the Central Excise and Customs Department, Karnataka, and very successfully represented the central government during the set term before the High Court, as well tried several criminal cases as a special prosecution counsel as well for the said department. In the year 1990, he came to be appointed as a senior standing counsel for the Income Tax Department and held the said position until end of 1992. During the said period, he ably assisted the court in disposing of thousands of appeals and references on questions of law. Most of the reported judgments during the said period are those which bear his name and can be found in abundance in the journals of ITR, CTR, etc. On 1st November 1993, he was designated as senior advocate by the High Court of Karnataka and practiced before the High Court of Karnataka until about the year 2002, after which he reduced his appearances before the court due to his ill health and desired to contribute his time for social activities. During his professional career, he represented some of the biggest industrial houses in the country as well as large public undertakings. He was the founder member and mentor of law firm Messrs. Chandrakumar Associates, a partnership firm which he established on strong edifice of strict compliance with professional ethics and practice with integrity. The firm continues even as of date and now managed by his daughter Srimati Yovini Rajesh, advocate, while now mentored by his son Sri Rajesh Chandrakumar, senior advocate. His breath is lost on 15th July 2020. When I enrolled in 1988, I used to watch his arguments. It was almost like a whisper of a magnificent submissions being made to the court of law. I have never seen Mr. Chandrakumar raising his voice at any point of time before any judge in any matter whatsoever. And on this occasion, we have with us Sri Vikram Huilgol, a young, promising, and very successful senior advocate from the High Court of Karnataka, who is practicing in the Karnataka High Court and also before the tax tribunals and also before the Supreme Court of India. Just to introduce, Mr. Vikram Huilgol obtained his law degree in ILS Law College, Pune in 2004, LLM from Harvard Law School, joined the chambers of Srimati Rama and Venkatesh, and thereafter worked at King and Patridge, assisting Mr. K.P. Kumar, senior advocate. He served as a government advocate, Government of Karnataka from 2017 to April 2021. He served as a senior standing counsel, Central Board of Indirect Taxes and Customs, Government of India from October 2017 to December 2021. He is designated as a senior advocate by the High Court of Karnataka, along with me in 2021. I am proud to be associated with Mr. Huilgol as a contemporary advocate. And today we have with us Mr. Rajesh Chandrakumar, son of Mr. G. Chandrakumar. Before commencing the seminar on GST aspects, I request Mr. Chandrakumar to say a few words about the legal luminary on which the today's seminar lecture is dedicated. Mr. Chandrakumar, sir. Mr. Rajesh Chandrakumar, sir. Only 1 second. Think you have to unmute. Yeah, you have to unmute.
Still on mute.
You're still on mute, but you unmuted yourself. I think you have to switch on your mic or something like that. You log in from the mobile simultaneously. You log in from the mobile simultaneously, and you can use the mic of the cell phone. Rajesh, you log in from the cell phone. Only 1 second. Only 1 second, 1 second, 1 second, 1 second. Okay, can you unmute yourself now, Mr. Rajesh? We can't hear you. Kindly log in from the mobile so that you...
Can you hear me now? I have unmuted it from the
Yes,
mobile.
yes. Now it's okay. Now you can.
I think there is an echo by that. For some reason, I'm unable to unmute myself from the laptop. It says the host does not allow you to unmute.
Please switch off the speaker of the laptop. The speaker of the laptop you can switch off.
That's done. Can you hear me now? Is that clear? That is off now. Are we audible? Am I audible?
Yes, yes, perfecto.
Right. Okay. Sorry for this. Well, thank you at the outset, Baswaraj. I must at the same time thank the Karnataka State Bar Council Law Academy. I must begin with thanking also Vikram for stepping in and doing this session. Congratulations to the Academy to be able to do these lecture sessions, which is for the benefit of the lawyer fraternity, especially those who are the younger ones learning the law, looking at the nuances of the law, and in fact, many of us also practicing the subject to get a better insight in these nuances. Coming as far as Mr. G. Chandra Kumar is concerned, my father, what can I say? I think I'm the most privileged, blessed one to be his son and to be his disciple, to learn from him. He, as you have read, had a very tough youth, having been a subject of partition, moved from Pakistan to India, spent a very few tough days, spending days and nights on the railway stations of Jodhpur till they could get a house, and then moved much later on to Bangalore. Yeah, he did a lot to support himself in his education. In fact, was a self-made man. Took up his own education simultaneously while he learned accountancy. He wrote books of accounts for various people and clients, and met his costs of legal education. Having joined the bar in his practice, of course, I saw him much later when I chose to join the bar in his practice. One thing that I can say, he was very, very meticulous. In fact, one of the largest appreciation that he received from all the judges in the High Court was the fact that the manner in which he presented his paper books. His petitions were just never tied up together, as was the norm then, to put papers together and stitch them up. He would always make the paper books, bind them, put a folder to it, and then present it in the form of a booklet. That was very, very impressive, and the manner and presentation was so neat and clean, as was his presentation in matters of arguments, as he was always very neat and clean. As you said, his arguments were in the nature of a whisper. The most important points, then the most important issues in the matter, he would submit it with such humility and grace, and that there was no need to raise a voice to say that the point was important. It was a great learning with him. All I could say is that he was a man with great integrity, having been given the position to run prosecutions under the Income Tax Department, the Central Excise and Customs Department, against small and big. It was a big challenge, and he met it with great grace and performed very well. He got a lot of appreciation from these departments. And like it said in his note you just read, several industrial houses which were prosecuted came down and compounded the offenses, given the fact that he was prosecuting, and they were really very worried. A man with great honesty, hardworking. Hardly saw him spend much time sleeping. His day was spent in the high courts. He would come back, spend time in this office immediately. As I had known, many lawyers would come back from court, go home, take a break, have a meal or two, and then come back much later in the evening. But he never did that. He would finish his work in court and be back in his office chambers and start meeting clients and then study papers for the next day. Being a prosecution counsel, being a counsel, standing counsel, there was enormous load on his table. So there was not much time for him but to spend time on his table alone, and he did it meticulously. In fact, I must share with you, while I was with him and he was the standing counsel for the Income Tax Department, there were several income tax appeals and reference matters then which were listed before the division bench, and there were close to 70 or 80 matters in a day which were put up for hearing, particularly before the benches of Justice Honorable Rajendra Babu then. And he would come prepared to court with a list of all cases where he was ready and list of cases which were covered. And he started a practice of conveying to the opponent counsel that he was conceding in several cases as covered, so they did not spend their time reading and trying to address the issue in court. And in cases wherever he wanted to contest them, he would also prepare a list of judgments which he was relying upon and share the same with the opponent counsels in advance, and thereafter even with the court. And in fact, this was a practice which came to be so much appreciated by the honorable judges that could result in a larger disposal of cases during his tenure. And most of the opponent counsels, I must say, were in awe as to the fact that he was prepared to share everything in advance and then present his arguments. And it became a healthy practice insofar as income tax matters were concerned that we share the judgments in advance. All I must say is that all his juniors who have practiced with him, studied under him, learned from him, the guru of who he is, several of us have done very well. In fact, three of us, namely K.S. Ravi Shankar, Kiran Javli, and myself, all who practiced and learned from him, came to be designated together with, I must share with you and Vikram in 2021. And all three of us are his disciples. So his office has continued and chooses to practice in the same way. And I can just say he was a great, honorable man. And thank you for the honor that you have bestowed on him today by rendering this session. And particularly, thank you, Vikram.
Thank you.
Now, I call upon today's dignitary and speaker, Sri Vikram A. Huilgol, a senior advocate, to take over the session and to enlighten us on the subject of the day. Please, sir.
Thank you, Mr. Baswaraj. Thank you, Mr. Rajesh, for gracing us. I mean, first of all, congrats and thank you to the Bar Council on two counts. One, for considering me, and on a personal note, worthy of speaking on this occasion, where it's sometimes overwhelming when we hear, it gives me goosebumps to even hear stories of doyens of the bar, how we would whisper in court, how we would carry case log, share it with the other side. These are values and practices that are, sorry to say, in my generation at least, it's few and far between. I'm not saying it's gone already, but it really gives us goosebumps to know that the traditions of the bar were in such high regard those days. So thank you, Mr. Baswaraj, once for one considering me to speak on this occasion. And also congratulations and thank you for organizing this series of lectures, not just Mr. Chandrakumar, of course, today, but so many of the legends you just mentioned, Mr. A.N. Jairam, Mr. Bhaira Reddy, so many legends. And it's a real honor for us to hear about them and listen to, of course, various lectures in their memory. So thank you on both counts. As far as Mr. Chandrakumar is concerned, Mr. Baswaraj and Mr. Rajesh have spoken, waxed eloquently about him. So I, unfortunately, and I consider myself, after hearing this, even more unfortunate that by the time I entered practice, I didn't see much of Mr. Chandrakumar. By the time I entered in 2004, as Mr. Baswaraj said, he had, due to unfortunate ill health, he had cut down on his practice by then. But one thing I can assure you that even as a raw junior member of the bar, we would still in the corridors hear stories of the legend that he was, and you would say, oh, Mr. Chandrakumar appeared in this case, he did this. And as a youngster, those are things that inspire us. And so in so many ways, we mold ourselves upon those stories we hear. And Mr. Chandrakumar is definitely one of them. There were so many others. Mr. Sarangan was there. We hear so many stories of how they argued this case, how they came up with an ingenious point, how they were able to convince the court in a tricky situation. And we at least try to emulate them in whatever small way we can. So it really is a great honor to speak on this occasion. And thank you, Mr. Baswaraj and Mr. Rajesh again. So without further ado, I think we'll start with the topic itself, which broadly speaking is goods and services tax, a broad, if I may say, framework on the constitutional perspective and the statutory perspective, with the considering the ocean of material that is available. It's almost impossible to encapsulate everything that I would like to share in the next hour or so. So what I thought I would do was, rather than going into the nuances and the nitty-gritties of the law, which just to give an example, a couple of weeks ago, Mr. Rajesh will understand when chartered account, some of the chartered accountants had asked me to speak. If I were to speak about constitutional perspectives, they'll probably all log out in the next 15 minutes because they want to know how exactly a GSTR 3B is to be filed, how to revise it, this and that. But I don't want to touch upon that as of now. But what I thought I will do is give a broad constitutional perspective, because it did require a major overhaul of the federal structure as we knew it, and possibly the greatest overhaul, if I may say, from a taxation perspective in the history of independent India. So I'll touch upon that, how it's from a constitutional perspective, it changed how and how statutorily also it is the landscape has entirely changed, and how the earlier indirect tax structure and the current indirect tax structure, how we migrated from it into the new one. So that is what I'll do over the next hour or so. So we'll start with the very, very beginning. In fact, I found this quote recently when I was researching on this topic. And this is from the great Alladi Krishnaswamy Iyer. In the context of how taxation was to be knitted into the federal structure that was being envisaged of independent India back in the late 1940s, when the constitution was still being drafted. So I'll just quote what he said on the 21st of August, 1947. He said, "There's no gainsaying that the subject of federal finance and the distribution of the taxing power is a difficult and complicated problem in any federal scheme of government. And it has to be approached with caution and discerning. And at every stage when we are dealing with this subject, we have to remember that after all, it is an individual or a corporation that is taxed, though there may be two taxing agencies, and that there is no unlimited scope for taxation. Under the scheme of financial distribution in the Government of India Act, and to some extent as envisaged in the present report as far as possible, the object is kept in view to prevent a double levy on the citizen from two different sources. That is why certain specific taxes have to be assigned to the center and certain other taxes to the provinces." As we all know, when the concept of India was being brought together, really, after 1947 until the constitution was enforced in 1950, a whole lot of negotiation, a whole lot of discussions had to be done to bring the princely states in, to bring the erstwhile states. So a lot of background work had to be done. And one of the various aspects that had to be discussed was to how does one convince the princely states or one of the earlier states and the provinces to give up their previously existing almost absolute sovereign power to tax, so as to allow them to enter the federal structure that was supposed to be India. So therefore, as Mr. Krishnaswamy Iyer eloquently put it, the whole object was to ensure that there is a taxation system which will not trouble the taxpayer, so that he's not made to pay a double tax on the same transaction, but at the same time ensure that there is a distribution of revenues between the center and the states. So that was what the original concept was. That is what the constitution framers wanted to bring into the federal structure that is our constitution. So therefore, this is, of course, for some it may be very basic, but I still think it's necessary to revisit some of the basics so that we don't overlook it. So in the constitutional scheme, the federal structure really is, as far as legislation is concerned, ingrained in Article 245 and Article 246. Article 246, Clause 1 gives exclusive power to the Parliament to make laws with respect to those subjects in the Union list. Clause 2, it refers to the concurrent list, where there is a concurrent power on the Union and the states. As far as taxation is concerned, interestingly, there was never any subject that was included in the concurrent list. And under Article 246, Clause 3, exclusive power to make laws with respect to those subjects in the state list under list number 2. So therefore, there was a clear demarcation of powers with regard to subjects in list 1 and list 2. We'll leave out list 3 for the moment because that's not really relevant from a taxation perspective. So under Article 246(1), Parliament had the power to make laws with respect to various subjects in list 1, including certain taxation subjects. Most commonly, as we all know, and sometimes also dislike, is the income tax. Under entry 82, the Parliament has exclusive power to levy taxes on income. Then there's customs duty. Under entry 83, Parliament has the exclusive power to make laws with regard to duties of customs. that is on import of goods. Then entry 84 was with regard to central excise, that is on the manufacture of goods. And then, of course, much later in 1994, service tax was introduced, initially only on about 3 subjects, but then it, of course, ballooned into a whole lot more until the negative list came out as recently as in 2012. So Parliament had the exclusive power to make laws with regard to various subjects that I just mentioned. Then there were also subjects that were exclusively reserved for the states. Sales tax, for example, under entry 54, that is tax on sale or purchase of goods, was exclusively reserved for the states. Entry tax, that is on entry of goods into a local area for use or consumption therein, was exclusively reserved for the states. State excise, that is on manufacture of liquor, is exclusively reserved for the states. Then we had luxury tax, entertainment tax, and so on under entry 62. Now, why I'm giving a background to all of this is, in a strange sort of way, this federal structure that was originally envisaged by the constitutional framers turned out to be a bit of a hindrance to the introduction of GST when the concept of GST wanted to be introduced across the country. And I'll come to how they actually had to almost drastically amend the constitution to introduce the concept of GST. But at that point in time, there was a clear demarcation of subjects between the union and the states. There is also, interestingly, Article 269, which says that as far as interstate trade and commerce is concerned, the taxes would be collected by the union but assigned to the states. So therefore, that was the original structure of taxation in 1950. Then a problem arose, and this was a problem of rather large magnitude, because states were, or rather dealers were not exclusively selling goods within the territorial boundaries of any particular state. Therefore, a person in Bangalore or Mysore would sell goods to Madras or Bombay. Therefore, goods would travel from Bangalore to Madras, goods would travel from Mysore to Bombay. Then the problem arose as to which state is the one that has the right to collect tax. Karnataka would say, or that as the case was, as the state was then known, Mysore would state that the goods originated over here, we have the exclusive right, goods were manufactured over here and sold from here, we have the exclusive right to collect sales tax. Maharashtra or Bombay state, as it then was, would say the goods are eventually being consumed over here, we have the right to levy sales tax. So therefore, there was widespread confusion across the country. And that's where in 1956, in the case of Bengal immunity was the state of Bihar, while passing a very, very elaborate judgment, which I can't go into for lack of time, but suffice to say for the moment that the Supreme Court eventually said that it is high time the Parliament came out with a law which lays down or formulates principles to determine which is the state that will collect tax when there are goods moving from one state to the other. Therefore, the Central Sales Tax Act was enacted in the year 1956 after the Supreme Court nudged, if I may say, the Parliament to finally come out with a law which specified which is the state which has the right to collect this tax when goods are moving from one state to another. Therefore, the Central Sales Tax Act under Section 9 said, all right, we will resolve this issue once and for all. It is the state from which the goods commence their movement that will have the right to collect sales tax. So therefore, in the example I gave, if goods originated from Mysore and ended up in Bombay, it would be Mysore state that would have the exclusive right to collect central sales tax. But as I mentioned, as per Article 269, the tax would be levied by the union. It is a central legislation pursuant to Article 92A of the central list, that is list 1. But the state would have the right to collect it. So eventually the revenues would come to the particular state. This is an oversimplification, if I may say, of the entire situation. There was a plethora of case law, because this is a very simplistic example I gave of goods moving from Mysore to Bombay. But a lot of times goods would move from Mysore to Bombay through Andhra Pradesh or goods will move from Mysore to Delhi through Andhra Pradesh, Madhya Pradesh, Uttar Pradesh, and then Delhi. And then at some stage, there would be a change in the nature of the goods. So there was a whole line of litigation that came out. But again, the current topic would not permit me, or rather I should not go into that because it's a whole new subject altogether. So, but Section 9 suffice to say that it resolved the issue and said that it's the originating state that will collect the sales tax. That was the situation that prevailed until 1994. Of course, service tax also was introduced, but it was a central levy. Then finally, I think across the states and the union, there was a strong urge to have, as is popularly known, one nation, one tax. And please don't get me wrong over here. There is a one nation, one income tax, but I'm talking about the indirect tax regime. At that time, as I mentioned, there was excise duty, there was customs duty, there was a sales tax for the first two being collected by the center, sales tax, entry tax, luxury tax that were collected by the states. So therefore, there was a whole lot of taxes that were being levied, some by the center, some by the states. And I think there was a time came where across the industry, across even the government, there was an urge to unify all of the entire indirect tax regime and have, as I said, a one nation, one tax regime. So therefore, the move for GST began in the early 2000s itself. There were a number of advantages. Now, before going into the structure of GST, one of the main advantages of GST was to prevent what is known as this, the cascading effect of tax, which I will explain. The other was to avoid multiple levies. I'll just give you an example. Let us say a car was being manufactured. Some parts had to be imported from, say, Germany or America or wherever. So when those goods entered India, there would be a customs duty that would be payable on those parts. Then the car would be manufactured, on which excise duty would be leviable. So therefore, already two taxes have gone into the final price of the commodity of the car. Then when, let's say the goods are moved from one local area to another or one state to another, an entry tax would be leviable. And finally, when the goods are sold, there would be a sales tax leviable. So therefore, you can see there were a plethora of taxes that would finally go into the final price of the commodity, which would raise the price of the commodity in itself. So therefore, all of these taxes, any manufacturer is not going to absorb the tax liability. As an indirect tax, he's going to pass it on to the consumer. Therefore, one of the reasons why GST was mooted was, let us do away with all these multiple levies. Let us have one tax where only that one tax will finally be ingrained into the price of goods. That was one of the major reasons for GST being mooted in the first place. Two is, as I mentioned, the cascading effect. I will not touch upon that now because in a bit I will deal with input tax credit, which is one of the major draws of GST. I'll touch upon that later, but please keep in mind that one of the reasons was to prevent the cascading effect of taxes. Three was to ease the administration of tax itself. As I was mentioning, multiple levies by different agencies required multiple filing of returns, required multiple assessment orders, multiple inspections, adjudications. So therefore, let us say there was a problem with excise duty, the example I gave, the problem with the excise duty that I paid. The central excise authorities would say, no, you have applied the wrong rate of tax, you have wrongly valued these goods, therefore you're liable to pay extra excise duty. So therefore I would have to go answer to them. Before that, I would have to even file a return. Then the sales tax authorities will come and say, no, you have wrongly valued the goods, you have wrongly applied the rate of tax, or various other issues. I would have to answer them. Entry tax, I would have to answer that. So therefore, another strong reason for the introduction, for the reason of introduction of GST was to reduce these administrative hurdles and make it as streamlined as possible. Permit me to say this, in the early days of GST, I don't know how much of this has been achieved. I'm sure Mr. Rajesh, if he's still listening, would completely agree with me that it is an administrative nightmare as of now, which the chartered accountants and a lot of the tax practitioners would readily agree. Although the one of the intention was to reduce these administrative hurdles, in my opinion, it hasn't really eased it at all. Or maybe I'm being a little too impatient. It is, after all, only about 6 years, less than 6 years since the introduction of GST. Hopefully, these are just teething phases, and so there is reason to be optimistic. Another reason for the introduction of GST was to have a single window agency for filing of returns, where everything was converted into an online system of filing. Initially, I had to file excise returns, I had to file service tax returns, I had to file sales tax returns, I had to file entry tax returns, luxury tax returns. Again, it was a logistical nightmare. And if I may say so, a chartered accountant's dream. But now what has happened in GST is all of these taxes have now been subsumed into one GST, and we only have to, well, it is not, again, with the caveat that it is not one return, but yes, the idea is to have only one return. I'll without going too far into the nitty-gritties of GST, I will comment briefly on this and how it is not really one return at all, but that is at least one of the intentions behind introduction of GST. So keeping this intention in mind, the union and the states had to come together, keeping in mind the rather rigid federal structure that our constitution had envisaged. So they had to come together and find out a way to introduce GST where there is one tax that is being levied by both the union and the states, and all indirect taxes are subsumed into that one goods and services tax, one general indirect tax across the country. The major hurdle was one of the major hurdles was the rigid manner in which the Article 368 restricted the power to amend the constitution. As we all know, right from Keshavanand Bharati onwards, the federal structure of our constitution has been upheld to be one of the basic structures. So therefore, amending that required jumping through a lot of hoops. It required all the states and the union to come together, sit down, brainstorm, and finally come up with a solution as to how we are going to amend the constitution without really violating its basic structure, without compromising on the federal structure of the constitution. That's why it took about almost more than a decade, 10 to 15 years, for finally the 101st Constitution Amendment Act to be enacted with effect from 16th of September 2016. As I said, the concept of GST started probably earlier than even 2005. So it took a good 10 to 12 years for the first step to be taken, that is to amend the constitution. How our constitution amended is again a very, very interesting topic. The first thing that had to be done was this rigid segregation of power to levy indirect taxes between the center and the union had to be broken down. As I mentioned, entry 84 gave power to the center to levy excise duty. One of the taxes that was sought to be subsumed into GST was excise duty. Entry 54, the power of the states to levy sales tax had to be subsumed into GST. Entry tax had to be subsumed into GST. That is under entry 52 of the state list. So therefore, the concept, as it's popularly known, of cooperative economic federalism came into vogue then. As I said, this union and the states had to come together. Each of them had to concede or cede some of their earlier almost sovereign power to levy indirect taxes, and so as to introduce this concept of GST where there would be a one nation, one tax. So therefore, to give an example, entry 84 has almost entirely been deleted. There is a very, very limited residual power on the union now, on the center now, to levy excise duty only on certain petroleum products, because petroleum products as of now have been kept outside the purview of GST. So entry 84, the power of the center to levy excise duty has been virtually deleted. Entry 92C, which was of course never really relied upon, but the power of the central government, so the center, the parliament to levy taxes on services was deleted. Entry 52, which gave the power to the states to levy entry tax, was deleted. Entry 54 was once again virtually deleted, because all that is remaining now is the power of the states to levy sales tax on, again, petroleum products, because they have been kept outside the purview of GST, and of course liquor for human consumption, which is again been kept outside the scope of GST. So as you can see, entry 55 also, taxes on advertisements, levy of tax on advertisements, had to be deleted. Entry 62 was substituted, where again the sovereign power of the states to levy entertainment tax and taxes on luxuries was deleted. And now it's only on, the power is only given to certain municipalities and panchayats, but that's a separate topic. So therefore, as you can see, the center and the states came together and said, okay, we will give up some of our powers for the larger good, for the ultimate objective of introducing a one nation, one tax. So the first problem was solved. So that rigid federal structure was dissolved to a certain extent, and the concept of cooperative economic federalism gave rise to the ceding of powers by both the center and state so that GST could be introduced. Then the question arose, who has the power now that all of these powers have been given up under Article 246(1) and Article 246(3)? How and who will have the power to make laws with regard to GST? There again, there was a problem. A lot of people thought it might be put under the concurrent list. But the state said, sorry, we cannot allow the power to levy or make laws with regard to GST under the concurrent list, because as we all know, under Article 254, the Union Parliament has primacy. So therefore, if there was going to be any conflict, the Parliament would have primacy over the state. So they said, no, sorry, concurrent list is not possible. Therefore, a separate article, Article 246 capital A, was inserted into the Constitution, which interestingly does not refer to any of the lists. It is an independent source of power that has been given. I'm using the word loosely because I don't want anyone to get confused with the concurrent list, but an independent source of power was given on the states and the union to concurrently make laws with regard to GST. So if I may read Article 246A, it starts as a non-obstante clause. It says, notwithstanding anything contained in Article 246 and 254, subject to clause 2, I'll come to clause 2, the Parliament and the legislature of every state shall have power to make laws with respect to GST. So therefore, an independent power was conferred on the Parliament and the states under Article 246A with regard to making laws for goods and services tax. Then again, of course, there is always remained the problem of what happens when goods or services are cross-border, when they are interstate in nature. Article 246(2) takes care of that. It says Parliament shall have exclusive power to make laws with respect to goods and services tax when the supply of goods or services takes place in the course of interstate trade or commerce. So therefore, when supplies of goods and services are intrastate in nature, the union and the states have been given exclusive power to make laws, which is why you will see that there is a CGST Act, that is a Central Goods and Services Tax Act, and each state will have something called an SGST Act. So Karnataka will have a Karnataka GST Act, Kerala will have a Kerala GST Act, Tamil Nadu will have a Tamil Nadu GST Act, and so on. Therefore, there are already two acts in place, a CGST Act, which applies to all the states, and each state will have a separate SGST Act of its own. Those are acts that have been enacted pursuant to the power conferred under Article 246A, Clause 1. There is also a third act, that is the Integrated Goods and Services Tax Act, that has been enacted by the Parliament, and that is by virtue of the power conferred under Article 246A, Clause 2, which confers exclusive power on the Parliament with regard to goods and services that are moving from one state to another. So we already have 3 acts in place. So much for one nation, one tax. We now have one nation, one tax, but three tax laws already. And there's also a 4th one. So permit me, this is on a lighter note, but yes, the overall intention was to have one GST across all the states across the country. So now you can see that how the Union Parliament, along with the state legislatures, paved the way for introduction of GST. By virtue of ceding their powers, by virtue of introduction of Article 246A, both the center and the states were given an exclusive power, exclusive, like I said, again, permit me to use the word exclusive, concurrent power to make laws with regard to GST. If they're interstate in nature, the Union Parliament had exclusive power to levy, to make laws with regard to GST and interstate supplies. A few concepts before going to the GST laws itself. Please remember, petroleum products as of now have been kept outside the purview of GST. So a lot of you may be wondering, why do we pay such a high rate of petrol? Because petrol really hasn't come into the GST tax net yet. Hopefully the GST Council and the states will, the center and the states will come together at some point in the near future. Even petroleum products will be subsumed into GST, but as of now, it has not been subsumed into GST. Alcoholic liquor for human consumption, by virtue of the constitutional amendment itself, has been kept outside the purview of GST. So, petroleum products, at least in the near future, there is a possibility that they'll be brought into the GST tax net. Alcoholic liquor for human consumption, the state said, sorry, we are not ceding our power to levy tax on that, what is popularly known as state excise. So that has completely been kept outside the purview of GST. So there is no GST on alcoholic liquor for human consumption. There were also some other amendments that were necessitated. Goods and services tax was defined to mean any tax on supply. So please see how the concept moved from manufacture, sale, entry, and so on to now supply of goods or services. And why I said there is alcoholic liquor will almost certainly never come within the scope of GST is because Article 366(12)A itself excludes taxes on the supply of alcoholic liquor for human consumption. So alcoholic liquor for human consumption has been entirely kept outside the purview of GST. Goods has been defined, the definition has been retained to include all materials, commodities, and articles, so very wide in scope. Services has now been, the definition of services has now been introduced under Article 366(26)A to mean anything other than goods. So therefore you have materials, commodities, and articles as goods, and anything other than materials, commodities, and articles are services. So as you can see, the concept of GST and the scope of GST is very, very wide in nature. It encompasses almost anything and everything. All supplies of goods and services can and very possibly have been brought within the tax net. Then on this one last couple of concepts before going into the 4th GST law, there is an IGST Act, as I said, which is an Integrated Goods and Services Tax Act. Again, as I said, like in Bengal Immunities case, there is the problem of formulating principles as to who is to collect that tax when goods are moving from or services are going from one state to another. Under Article 269A, goods and services tax on supplies in the course of interstate trade and commerce shall be levied by the government of India, and the tax shall be apportioned between the union and the states in the manner provided by Parliament. So therefore, it is again, IGST is collected by the union, but it has to be apportioned between the union and the states in the manner provided by Parliament. Now that manner provided by Parliament is under the GST, under the IGST Act, under Section 17 more specifically. And Section 17 more specifically has been enacted pursuant to clause 5 of Article 269A, because there is a specific power conferred on Parliament to make laws to formulate principles for determining place of supply of goods, and so on. So therefore, the IGST Act essentially is an act which levies GST on supply of goods and services which are interstate in nature. But more importantly, it is a law that formulates principles to determine when goods can be deemed to be said or can be said to be moving from one state to another, or services have been supplied from one state to another. There is a complex, very, very complex set of provisions, but broadly speaking, and from a bird's eye perspective, it would suffice to say for the moment that one needs to ascertain two concepts. One is the place of supply. So there are a set of rules to determine where the supply takes place. So does the supply take place in Karnataka? Does the supply take place in Tamil Nadu or Andhra Pradesh, and so on? For that, a lot of them are service or good specific. For example, immovable property. If any services with regard to immovable property, the place of supply is where the immovable property is. So just to give an example, there are several set of rules for various other such supplies. So one needs to first go to the IGST Act and ascertain what is the place of supply. Then there is a separate set of rules to ascertain the location of the supplier. So therefore, go to the IGST Act, ascertain the place of supply, ascertain the location of supplier. If the location of supplier and the place of supply are within the same state, then it is an intra-state supply, in which case your CGST and SGST Act will apply. But if the goods are moving from one state to another, or if the location of supplier and the place of supply are in different states, then tax will be payable under the IGST Act, and then it would be apportioned between the center and the states in the manner provided under the IGST Act itself. Now here, interestingly, there was a departure from the earlier concept of where, as I mentioned, under the Central Sales Tax Act, it is the state in which the goods commenced movement where it would have the right to collect the tax. But under GST, they changed the concept to a consumption tax, where the state where the goods or supply or services are being consumed, that is the state that would have the right to collect the tax. So therefore, 50% would go to the center, 50% would go to the state where the goods or services are being consumed, and not the state from which the goods are being supplied or the services are being supplied. A lot of states, very frankly, like Karnataka, Maharashtra, Tamil Nadu, which are manufacturing centric or service centric, would tend to lose out on some revenues, but that is for a more macroeconomic discussion. But suffice to say that yes, the service and manufacturing heavy states, like the states I just mentioned, Maharashtra, Karnataka, Tamil Nadu, would stand to lose on some revenues as opposed to the earlier regime. But there is, of course, a give and take there also, because service tax was entirely being levied by the center there, but now supply of services are also being brought to tax under GST, and a portion of those revenues are coming to the states. So therefore, that is, broadly speaking, the structure of GST vis-a-vis the Constitution. There's a CGST Act and an SGST Act. CGST and SGST would be levied when there are intrastate supplies of goods and services. IGST would be levied when there is interstate supply of goods and services, and there is a portion of tax after the IGST is collected. So therefore, broadly speaking, 50% of the revenue, all tax of all GST will go to the center, and 50% will go to the state. If it's a local supply, it will go to the state where the supply is made. If it's an intrastate supply, it will go to the state where the goods or services are being consumed. Here again, I caveated with the fact that this is a very macro view. There are a lot of exceptions to this, but suffice to know for the time being that this is how broadly the scheme of GST is structured vis-a-vis the Constitution and the and the statutes that have been enacted pursuant to Article 246A, 1 and 2. As I was saying, there's also a fourth GST law. So we have a central GST Act, a state GST Act, depending on which state you're in. Then there is an IGST Act. The fourth GST Act is what is known as the GST Compensation to States Act. Now, a lot of us will be wondering why exactly is there another act only for this purpose? This is because a lot of the states felt that with the introduction of GST and with the overhauling of the indirect tax regime from its earlier system to GST, a lot of states felt that they would lose on substantial amount of revenues because the states were already getting a fixed amount of revenue under the earlier regime. Migrating to GST, the states felt we will lose out, at least initially, on a whole lot of revenue, even though eventually we may make it up. So then the center said, fine, in the spirit of, as I said, cooperative economic federalism, we will compensate, we as in the center will compensate you, the states, for the initial losses for at least the first 5 years. Then the question of how exactly are we going to quantify these losses? Now that is where this GST Compensation to States Act comes into play. It's very interesting, so I'll briefly deal with it. What this enactment, broadly speaking, says is, we will provide a base year, that is 2016-17. You take your revenues for that particular base year. Now, how to compute that base is beyond the scope of this. We will not go into that. But let us say there was a sum of, say, 10,000 crores, which was the base, which was the tax collected by that particular state in the year 2016-17. That formed the base. Then under one of the provisions, that is section 3, there was a projected growth rate of 14% per annum. So therefore, the center said, we expect the states to grow at a rate of 14% per annum. Therefore, giving the example 10,000, it would be, they would apply 14% of 10,000 and expect the states to have earned in the year 2017-18, 10,000 plus 14%. And then the center said, if you, whatever differential there is between that amount you have projected to have earned and what you have actually collected, we, the center, will compensate you for that loss. So very interesting concept. So again, this is where this a lot of negotiation, a lot of discussion had to be done to arrive at this concept as well, which is why we have now a fourth GST Act. As I said, the Compensation to States Act. There again, a question may arise, where is the center getting the revenues to compensate the states? So therefore, there is a fourth tax that is also being levied under this, this Compensation to States enactment. And the center and the states decided, we will levy a separate tax under this, under this enactment on all luxury goods, or as was popularly known, sin goods. For example, colas, the soft drink colas, high-end luxury cars. So the states and the center said, fine, you please tax all these very, very high-end luxury items so that you will not add to the burden of the common man. Eventually, we will collect it from the rich who can afford these luxury items. And that corpus will be used to compensate the states for the losses that they would have incurred given the projected growth rate of 14%. It was working very well until, unfortunately, the pandemic hit in 2020. So practically everything went haywire in 2020 when suddenly the entire, as we all know, the entire nation went into a lockdown. All this projected revenue, everything went for a complete toss. There was no, forget about projected revenue, there was no revenue at all. For example, March and April 2020, there were no revenues at all for the states and the center because there was no business that was being, virtually no business that was running. But of course, therefore, once again, they had to negotiate. I think some of the states, including Karnataka, had to raise grievances with the center for even release of some fund. But I think eventually all of these differences are being ironed out. The constitutional validity, you may be interested to know that the constitutional validity of this GST Compensation to States Act was challenged, upheld by the Honorable Supreme Court in the case of Union of India versus Mohit Minerals. This reported in 2019 to SEC. So that act also is here to stay for it, so as to compensate the losses of states. Initially, I think it was the first 5 years. Because of COVID, I think that may have been extended, but I'm not very, very sure, so don't take my word for it. But I think there is some sort of discussion as of now so as to extend that period, because COVID did hit, as we all know, the revenues substantially. So I think that on that note, I won't go into further macroeconomic principles, because I think that at least I found it very interesting as to how the states had to be compensated. So now I think, given the time it's 7:34 already, or 7:34, I'll probably dedicate the next 15-20 minutes or so to how the GST Act itself works. So I've given you the overarching principle of the concept of GST, how the Constitution had to be amended to introduce GST, how the acts are structured, what each tax seeks to, what each act seeks to tax, and why there are 4 GST enactments. Now we'll go into just some broad concepts again. Time will not permit me to go into the details of the individual GST laws. At the outset, please note, very, very interestingly, if you open the CGST Act, there is only one CGST Act across the country, and you open any SGST Act across the country, be it Karnataka GST Act or Maharashtra or Gujarat or wherever, you will note that the acts are virtually verbatim. There will be no difference, except, of course, that center will be replaced by Karnataka, and sort of these sort of changes which are necessitated because of practicality. But otherwise, the enactment reads verbatim the same, because eventually it is like I said, a concurrent levy by the union and the states. Therefore, the enactments also have to be identical. Of course, there is a broader discussion of what happens now that there is an exclusive power on the states. What if one state decides to unilaterally amend its GST law? There are certain safeguards in place by virtue of Article 279A and the GST Council, but that again is a very complicated concept, which will, thankfully, we have not faced that problem yet, so I will not go into it. So at the outset, as I was saying, the CGST Act and the SGST Acts read verbatim. So we don't need to worry about each state having a different law. If you, some of you would have noted that under the earlier indirect tax regime, Karnataka VAT Act was completely different from Maharashtra VAT Act. Maharashtra VAT was totally different from Delhi VAT. The rates of tax also were different. So therefore, it was a very disconnected indirect tax regime. But under GST, CGST, and all the SGST Acts read verbatim the same. Importantly, the rates of tax are also identical, because the whole concept of GST is premised on a one nation, one tax. Therefore, it is absolutely necessary for the smooth functioning of GST that the GST laws across the country, the SGST and the CGST laws, are in no way different from one another. So we don't need to worry about the fact that West Bengal GST Act is different from Karnataka. They will be the same, and they are at least the same as of now. As I was mentioning, the major shift in the indirect tax regime was from the earlier concept of taxing manufacture, sales, etc., entry and so on. There is one overarching principle of tax on supply of goods and services. So the taxable event is the supply of goods and services. The taxable event, simply speaking, is the event upon the happening of which the tax liability is triggered. So therefore, the moment there is any supply of goods or services, GST would be payable. Again, I'm repeating, if it's an intrastate supply, then you will have to pay CGST and SGST. If it's an intrastate supply, you will have to pay IGST. But the taxable event now is the supply of goods and services. Then there are provisions which lay down principles for the time of supply, because it's important to know when exactly the tax liability would be triggered. So therefore, when the supply takes place, you have to pay tax. When does the supply take place? There is a provision under the GST Act which specifies when exactly the supply is deemed to have taken place. Then there are rules which prescribe valuation of the supply. On what value am I required to pay GST? There are rules for that. Again, who pays the GST? The answer to that is simple. In 99% of the cases, it is the person who is making the supply, who is actually supplying the goods and services. But with one important exception, there is a concept called a reverse charge mechanism, where in certain cases, it is the recipient of the goods and services who is required to pay the tax and not the supplier. So with the exception of those special category of cases where there is what is called RCM, that is reverse charge mechanism applicable, in all other cases, it is the person who is supplying the goods and services who is liable to pay tax. Then in order to ensure that GST, because there was a huge overhaul and both the center and the states did not want to trouble the common man too much, the threshold for which the turnover threshold above which a person was required to register was increased to rupees 40 lakhs. So therefore, anybody with a turnover of less than 40 lakhs, 40 lakhs in certain states and 20 lakhs in other states, they need not register at all. So therefore, small businesses, the small kirana stores and so on, which say had a turnover of 5 or 10 lakhs in a year, were kept outside the GST tax net. So therefore, that was done in order to benefit the common man and make sure that he is not troubled by the introduction of GST. And then the concept of, as I mentioned earlier, the concept of input tax credit was introduced across the country. Now, let me clarify. Input tax credit was not a new, is not a new concept under GST. Input tax credit worked under VAT. It worked under what was known as CENVAT, which was under the Central Excise and Service Tax regime. But the problem there, and I'll explain this, this has to be understood very, it's a very important concept. Input tax credit is basically to ensure that only the value addition of goods or services are brought to tax. Now, I'll give you a very, very simple example. Let us say I sell goods to person A for 100 rupees, on which, let us say, for mathematical purposes, 10% is the applicable rate of tax. So therefore, I will collect 100 rupees. I will collect a 10 rupee tax from him and pay 10 rupees to the concerned department. Now, let us say person A wants to sell those goods to person B. He wants to sell it at the rate of 150 rupees with his profit. Again, applying 10% as the rate of tax, he will have to pay tax at 15 rupees because 10% of 150 rupees. But he will not pay the entire 15 rupees tax because he will avail credit of the tax I have collected from him. Now, simplistically put, that is his input tax credit. Therefore, his tax liability is 15 rupees. He will deduct his input tax credit, that is the tax collected by me from him, that is 15 minus 10, and pay 5 rupees. Now you see what has happened over there. His value addition is 50 rupees. That is 100 rupees is the good value of the goods I sold to him. He has sold it at 150 rupees. Therefore, 50 rupees is really the value addition. And as you can see in the example I gave, he is paying 5 rupees tax. That is 10% of 50 rupees. Therefore, this is the concept of input tax credit so as to ensure that only the value addition is brought to tax. Now, I'll tell you, I think time permitting, I'll quickly explain why exactly this is absolutely necessary. I'll go back 2 regimes earlier, even before VAT. VAT came in 2005. There was the sales tax regime before 2005, where there was no input tax credit at all. There, what would happen in the example I gave was, I would sell to person A for 100 rupees, collect 10 rupees tax from him. he would sell 150 rupees, no input tax credit at all. He would have to pay 15 rupees. So therefore, 10 rupees of my tax has already gone into the price of the goods. Then when he sells it to person B, he is selling it at 150 rupees. He's paying 15 rupees tax on it. That 15 rupees also is imbibed into the price of the commodity. Let us say that person sells it for 200 rupees. Person B to C sells it for 200 rupees. He will have to pay tax at 20 rupees. He will include that 20 rupees also into the price of goods. Finally, what has happened is 20 rupees plus 15 rupees plus 10 rupees has gone into the price of goods. Finally, who suffers? People like you and I, who are the final consumers of the goods. We are paying, in addition to the price of the goods, 20 plus 15 plus 10 rupees as the price of the commodity. It was in order to avoid this situation that the concept of input tax credit was introduced. Originally, in the 80s itself, the concept, a loose concept of input tax credit was introduced by way of something called mod VAT. But that was very exclusive to central excise. It was not across the board. Then Sen VAT was introduced in 2004, where they made credit for the first time interchangeable between excise and service tax. So therefore, for the first time across India, a manufacturer, let us say, we are not living in silos, a manufacturer would utilize various services as well. That service provider would collect service tax from this manufacturer. When the manufacturer is paying his central excise duty, he was permitted to take Sen VAT credit of excise duty collected on his inputs and service tax collected on his input services. Therefore, in order to avoid this, what is called this cascading effect of taxes, Sen VAT credit was working at the central level. But as I started right at the beginning, there was a clear demarcation of powers between the states and the center. There was no question of setting off the input tax rate against tax payable on sale or purchase of goods. Therefore, each state had to come out with its own VAT Act. So Karnataka VAT Act came with effect from 1st April 2005, where they introduced this VAT concept, this input tax credit concept, only with regard to sales and purchases of goods in the state of Karnataka. So there again, there was a problem. What happens when goods are moving from here to Maharashtra? Maharashtra would not allow input tax rate of goods of tax paid in Karnataka. Why would they? Correct? So if finally the tax is going to Karnataka state, Maharashtra would say, listen, I cannot give you credit of that tax because that tax has gone to the kitty of Karnataka state. It is a loss to me if I give you credit of that. Therefore, if goods are coming to Maharashtra, you once again pay tax on the entire value. So really, VAT was working in a very, very limited scope, where each state would have its own VAT and the center would have a Sen VAT for excise duty and service tax. Now under GST, now that we have this one nation, one tax concept, wherever you supply goods from, wherever you supply services from, that recipient, any state, he may be in any state, he can now avail input tax credit of the GST collected from him. So in the example I gave, if the goods went from Bangalore to Maharashtra, the GST collected by, let us say, Vikram supplied goods to person A in Maharashtra, person A would be able to avail input tax credit, that is, deduct that tax collected by me when he is computing his GST on the subsequent supply that he is making. So therefore, this was absolutely, this goes to the root of why GST was required. Finally, the concept of GST is to ensure that the consumer pays as little tax as possible when he is eventually purchasing the goods. So again, as I mentioned, sales tax regime was a complete, there was no VAT at all. VAT was working in sort of individual silos. Central government had its own VAT, state had its own VAT. Each of the states had their own VAT. So really, the concept of VAT, of value of input tax credit was very limited in scope. Now with GST, any tax that is collected from a supplier, by a supplier, can be availed as input tax credit by the recipient. Again, I will caveat this with the with the fact that I am oversimplifying it. There are exceptions. There are cases where input tax credit cannot be taken, or where input tax credit can only be partially taken. But suffice to say, for the moment, there are various exceptions. But for the moment, I think it is sufficient to explain, for me to state that GST is an input tax credit based system where anybody across the country can avail input tax credit of the tax collected from him. This was one of the primary intentions of GST, and I think this is something that the industry has welcomed across the board. I'll again digress a little bit into a more macro discussion. Whether we as consumers have seen a reduction in the price of goods because of this, I'm not so certain. But that is something for the economists to examine why exactly that is not happening. Petrol, for example, right now, which is one of the major commodities that go into everything, all manufacturing, even for us to transport ourselves, that is kept completely outside the purview of GST. Maybe that is one of the reasons why a lot of the prices are not reducing. Land, for example, land is completely kept outside the purview of GST. So therefore, a lot of land transactions are not at all within the scope of GST. So there's no question of input tax credit at all. So that is possibly true of the reasons why the price of commodities as of now, at least in our experience, my experience, we have not seen a drastic reduction in any of the price of commodities. I think I'll wrap up in the next 2 or 3 minutes. One thing I want to focus on, I said one of the important reasons for introduction of GST was to reduce the cascading effect of taxes. The system should work. Like I said, practically, whether it is or not, we don't know for a fact. One of the concepts was ease of administration. Has administration really been made easier? Again, my limited experience would say the answer is no. Are we required to file less returns? No. Yes, we don't have to file returns under 3 different enactments, or under service tax, excise, sales tax, entry tax. That we don't need to do. But we still have to file on a monthly basis 3 returns. One is where every time, by the 10th of every month, we need to file something called a GSTR1 for all our outward supplies. By the 15th of every month, we have to file a GSTR2 for all inward supplies. And by the 20th of every month, we have to combine the 2 and file a final GSTR3 return, which will be our final monthly return. So has the logistical nightmare been reduced? In my opinion, I think it has probably been made worse because of various flaws in the GST network itself. Lastly, I'll say, has the complications in the law, one of the important intentions behind introduction of GST was to simplify it for everyone. Has the law been simplified? Categorically, I will answer no. There are various lacunae in the law. I would go to the extent of saying that the VAT system, which I was fortunate to have, when I entered practice itself, the VAT system came in. So I saw the evolution of the VAT regime until it came to an end in 2017. Was, in my opinion, the VAT system was so simple. It was working so simplistically. There were only 3 rates of tax, really, other than the exempt commodities. There was 4%, which got increased to 5%, 5.5%. Then there was a 12%, which got increased to 14%. And for very, very few commodities, there was a higher rate of tax for jewelry and so on, but slightly higher in luxury items. But really, there were only 2 rates of tax. Now we have 5%, 12%, 18%, 28%. The intention of simplifying the law for reasons not known to me, at least, have the law has been made overly complex. There are various returns that need to be filed. Like I said, there are various rates of tax. The adjudicatory process, once again, has been made quite complex. There's an audit. There are 2 different adjudicatory systems. appeals as of now are working in a very truncated manner because tribunals also right now have not been notified. So yes, we are at a very early stage. So I'll conclude by saying this. Yes, we are at a very early stage. Yes, maybe I am being overly harsh on why the system is not working to our expectations. It is definitely our fond hope that it will achieve all its objectives over a period of time. One can only hope that the taxpayers and the departments work together so as to ensure that the honorable and laudable objects of GST, when it was first introduced, are met. I think with that, Mr. Basraj, I'll conclude because it's already almost 8 o'clock. It is a Friday evening after all, and there are listeners who are kind enough to have stayed this long. I once again thank you for giving me this absolute privilege. I hope I was able to do even some justice to the onus that was cast on me. I thank all the listeners for having tuned in, and I hope you have been able to take away something from the last 1.5 hours. Thank you once again.
That was a magnificent speech with excellent preparation and meticulous delivery. On behalf of the Karnataka State Bar Council and Karnataka State Bar Council Law Academy, I convey my heartfelt gratitude to Sri Vikram Huilgol, a senior advocate, for delivering this memorial lecture in the memory of Sri G. Chandrakumar. Now, you can ask the questions to the learned speaker if you have any doubts on the subject.
One thing before that, I'm sorry, Mr. Rajesh is once again tuned in.
Yes.
Thank you, Mr. Rajesh, for being there and listening to this. I'm sure that a lot of these thoughts are very basic, but thank you so much. Thank you.
It's been a wonderful pleasure for me to hear you.
Thank you.
Now, before others can unmute yourself or switch on the video and you can ask the questions if you have any doubts. Now, one question: whenever we raise the bill to the corporate sector, they ask us to fill the GST form as advocates. So, the first question is: are the advocates do they come under the GST the scenario?
So I think subject to correction from Mr. Rajesh, I think as I was mentioning, if I'm not mistaken, advocates are under the reverse charge mechanism, where the recipient would have to bear the tax burden. So therefore, there is no necessity of advocates actually having to collect the tax and pay the tax themselves. I think there is a bit of fluidity as far as this is concerned, because honestly, for the three of us here at least, I think senior advocates also have been treated slightly differently. I have to admit, I'm not very, very certain on this concept, although a lot of people ask me. I think if Mr. Rajesh can also add his inputs.
Let me share my thoughts. As far as I think supplies of services to commercial enterprises are concerned, that is under the reverse charge. But supplies to individuals is exempted. There is an exemption notification. So any lawyer providing services to individuals, definitely there's no reverse charge, neither is there a liability on the lawyer. But yes, any commercial enterprise, the reverse charge triggers in, and therefore the commercial enterprise would pay so. There's a fair amount of debate as to whether senior advocates are liable to the tax, because the exemption notification seems to use the expression advocate and not necessarily senior advocate. But it does say whether if the service is directly provided to a commercial enterprise, then reverse charge will remain. Now, what happens is many times where the senior counsels are providing services to a law firm, and the law firm is not in the nature of a commercial enterprise. And that is the issue where there's a fair amount of debate. Now, several law firms have therefore taken a stand from a cautious approach to discharge the service tax in such cases, because otherwise they may be treated as a commercial enterprise and the reverse charge may get triggered. But that there is no unanimity in so far as the levy on a service on the services of a senior advocate is concerned.
Okay, the next question is regarding the constitutional angle. Now, the rules, of course, you can challenge on the ground that it is ultra virus and all that. Now, today, when you challenge the constitutional validity of a plenary legislation, number one, it is violative of fundamental rights. That is part 3. And second one is want of legislative competence. And after Zahira Banu, it is manifestly arbitrary. Now, how do you challenge the tax laws, and which is the predominant challenge by the tax lawyers on every tax legislation or amendment to tax legislation? Is it necessarily or predominantly on the legislative competence? Because fundamental right, I think it's a weak argument, and manifest arbitrariness, though, that is completely ruled out. So,
Absolutely, sir. I think most of the case law as regards as regards validity of taxing legislation would be on competence. But now with GST, at least now there's not much litigation scope over there. But earlier there would be a concept of this is in effect a tax that is being levied on manufacture, but it is being collected in the guise of sales tax. So therefore, it is an encroachment of the power exclusively conferred on the unit. So those would be arguments that would that were being raised. Now, most importantly, between services and goods, with the concept of software services coming in and software being held to be goods, where to draw the line? Now, are the states encroaching upon earlier regime I'm talking about? Are the states encroaching upon the service tax, the right of the center to levy service tax, or vice versa? Was a number of cases on that. So where exactly does one draw the line? Who has the competence to levy tax on, say, a supply of software? Is it really in the nature of service? Is it really in the nature of sale of goods? Those were, in my experience, a number of cases that came up regarding validity. You're right, sir. As far as fundamental rights are concerned, there would be feeble arguments that would be raised saying Article 14 and so on, but very, very, very few and far between. Article 19, 1G, where the tax is so burdensome that it affects my right to carry on business and so on. But those are very, very few and far between.
Okay. Now, this credit input, I just give an example of my son. You know, he used to pay a lot of GST when he launched this website, huge GST. He was really crying, oh, all my money is gone and all that. Now the GST component has come down. Drastically, it has come down. So I really want to understand how exactly this works. Input, for you give me an example. Now the credit input, the GST payment from him is very, very less when compared to the earlier scenario. Now, how exactly it has come down and how exactly it works?
So I'll tell you this now.
For example, I have, yes, tell me.
So whatever, say now there is obviously a supply of some service that Nitin is providing, for which he is required to discharge his GST liability.
Okay.
The concept of input tax rate is that whatever services or goods, let's say for providing that service, he needs to buy a number of laptops, needs to buy a number of other, like say drivers, these servers and so on.
Rent.
And drivers and so on. And there would be GST collected from him on that. Let us say it is raised on let's say the name of the enterprise is ABC Enterprise, just for argument's sake. Now, there would be bills raised on ABC Enterprise for this laptop. There would be bills raised on ABC Enterprise for some service that is being provided to them. Now, if those goods and services are being used by Nitin in order to provide his taxable supply, and if it is being used in the course of his business, then his output tax liability will be reduced by those taxes collected from him. So let us say his GST liability, again, 100 rupees, on that it is 10 rupees. That's for simplistic purposes. Now, 10 rupees is his tax liability. But in order to provide that 100 rupees worth of service, he has availed various other services, which cumulatively are, let us say, 5 rupees. So finally, when he pays the tax, when he files his return, he will say, my output supply is, the tax liability of my output supply is 10 rupees. My input tax credit, there are two concepts there. Now there is an electronic credit ledger. Now automatically, whatever services that are being rendered to you and tax that is being collected from you will get credited into your electronic credit ledger. Now that is like a separate ledger which each service provider or any supplier has, and which can be utilized in order to discharge his or her output tax liability. So let us say there is 5 rupees lying in your electronic credit ledger. That 5 rupees can be utilized in order to discharge that 10 rupees output liability. So that, I mean, again, broadly speaking, that is how it works.
So if I purchase anything for my farm, for example, his is a company, this is a personal question. His is a company, Daksha Legal Solutions Private Limited, which has a GST number. For example, if I purchase anything to my office, is it advisable to purchase in his name, the company name, so and pay the GST so that his
So
GST
there again, the question will
is
be
essential
the
goods.
question the department will possibly raise tomorrow, when they are if they take Daksha Legal Solutions Private Limited, the case is taken up for audit or for adjudication. One of the issues the department may raise is you have shown all of these commodities that have been purchased. All those commodities will have to be, mind you, purchased in the name of Daksha Legal Solutions. The GSTN number of Daksha Legal Solutions will have to be mentioned in that invoice. That supplier will have to show that in his outward supplies. Then what will happen is the tax collected from Daksha Legal Solutions will get auto-populated and credited into Daksha Legal Solutions Private Limited's electronic credit ledger. But one problem is now when they look into all of this, let us say, you may buy laptops, you may buy so and so many items for your office. If you show it in Daksha Legal Solutions Private Limited, when they come for an inspection and so on, a problem may arise where they say, okay, you have shown you have bought 100 laptops. Where exactly this?
Yes, this is what exactly.
That may be a problem. That is the only thing.
Okay. Then any other questions from any? As I indicated earlier, all Karnataka State Bar Council seminars are like a recording studio, which will go viral thereafter, because every seminar which is uploaded will reach up to 5 to 10,000 people later, because it will be relayed on Facebook. There is a software called OneStream, so you can directly relay as if it is taking place at a given point of time. Anyway, on behalf of Karnataka State Bar Council and also Law Academy, I convey my gratitude to Mr. Vikram Huilgol and also Mr. Rajesh Chandrakumar with yet another lecture in the memory of another legal stalwart. We'll come back again. So good evening and good night for a wonderful weekend. Only 1 second. Only 1 second.